Good morning, everyone. It's Shauna the Tax Goddess. So got asked a whole string of really interesting questions. How I feel about buying a house. And this is, I'm going to give this to you in a few different theories here and a few different ways that I particularly look at the world. So obviously you guys know that I am a tax goddess, and Tax Goddess, our company, focuses on 7 and 8 figure entrepreneurs. So these questions are really looking at some of our new, one of the questions is about cryptocurrency. So my brain is kind of going off in a million different directions here. So let me run through the questions and let's see how this applies. All right. So the first question is buying a home a smart tax move? Now, I want to throw this out there as, yes, you're going to get tax benefits, okay, but this is a little bit of a loaded question. Buying a home as a smart tax move, sure, you're going to have a mortgage. You're most likely going to be able to deduct that mortgage. But buying a home as a tax move, you never ever let the tax tail wag the dog, okay? So buying a home is an investment. And for most people, it's one of the largest investments that they may make. So when you buy a home, I would highly recommend that you look at that home as an investment from the perspective of an investment. So really you want to be looking at, are you getting a good deal? Are you buying something that's going to be easy to resell? Are you going to have to do major construction? How is that going to work in your investment portfolio as a whole versus buying a home as a smart tax move? In my mind, buying a home as a tax move is almost kind of secondary. There's a huge asterisk there, okay, because there's a lot of side notes to that. Are we buying it as a rental? Are we going to buy it to flip it in 2 years and get the $200,000 or $500,000, $250,000 or $500,000 exclusion? So there are some cool ways that you can use tax planning when buying a home. But unless that's a part of your strategy, this question was really asked more as just a general, I'm going to buy a home to live in for the next 10, 15, 20 years. I don't think that buying a home is really a tax move, okay? Buying a home is an investment move. Now, the next question, what can you deduct? So this is also a loaded question in my mind because it depends on who you are. So are you a business owner or are you a regular individual? Are you a W-2 individual? If you are a regular W-2 person, the only really 2 things that you can deduct in most cases, I know some of the states and some of the cities have extra things you can deduct, but at a federal level, you're really talking about mortgage interest and property taxes. And even there, your property taxes will get capped at $10,000 per year that becomes deductible. So if you're a business owner, this is a very different conversation, because now you may have a home office, you may be able to write off a percentage of every penny that touches that home. So that could include cleaning expenses, that could include pool maintenance, that could include pest control, HOA, it could include 1,000,001 different things, but only if you're a business owner. Okay, so if you're a regular W-2, you are not able to write those things off. So again, kind of a loaded question here. This channel talks to business owners. So that answer is about business owners. Effectively, it's a percentage of every penny that touches the home, and potentially even more than that, depending on whether you have, for your business, do you have an athletic facility? You might be able to write off the entire pool, okay? There's some very cool things you can do as a business owner. Now, the next one, what things should you keep receipts for in the future? I highly recommend that if you spend a penny on that house, and I mean down to paper towels, down to the cleanings of the vinegar for cleaning the floor, whatever it is, okay, I recommend that you keep all the receipts, all of them, okay? Because the problem is that you may be a W-2 now, but maybe you're going to open a business, or you're about to open a business, or you're just getting into a partnership. Well, in 3 years, you may need those receipts. And if you don't keep them, now they're gone. Okay, so what I always do and what I recommend that everyone gets in the habit of for every purchase, let alone just this stuff about the house, every time you buy anything, when you're standing at the little checkout counter, take out your phone, snap a picture of the receipt, and then if you want, you can throw away the receipt because you now have a visual, a photo of the receipt. Okay. Now, I would recommend that you come up with some sort of filing system for those receipts. We're not going to go into it on this video. But for example, QuickBooks Online Edition, you can actually attach the receipt directly to the expense in QBO. And a lot of our clients actually have and use QBO, QuickBooks Online Edition, specifically to also manage their personal finances, their personal set of books. So I would recommend something like that, which is perfectly fine. Now, the next question, how can sustainable or green improvements to your home help the homeowner save on taxes? Now, that question really depends on where you are and what kind of green improvements you're doing. There's many programs, lots of different programs at the local level, at the city level, at the state level, at the federal government level, that all have to do with these green improvements. So that could be something like a solar water heater or solar panels at the federal level. It can go all the way down to, for example, we live here in Arizona. If you xeriscape your lawn, right? So instead of having a green lawn, you do desert landscape. The water company here in Arizona will actually give you credits on your water bill. So it really can go a huge gamut of who's going to give you money or credits or deductions or percentages off from everything from the city and state and local level all the way up to the federal government level. Next one, what tax ramifications should homeowners be aware of? So, of course, you can, as we spoke, you can deduct mortgage interest, you can deduct property taxes. But again, you know, these tax ramifications, typically what we're looking at is on sale. So if you're a regular W-2 employee and you're not using your house for business at all, when you sell your home, if you've lived in it for 2 out of the past 5 years, you get what's called a Section 121 exclusion, which means that if you're single, you have up to $250,000 of gain on your property that is not taxable. If you're married, that's up to $500,000. Now, you realize I said that was for the W-2 employees. They're not using the house for business whatsoever. If you use your house for business, those calculations get a lot more complicated, okay? Because now you might have depreciation, you might have depreciation recapture. There could be other tax ramifications. So cost segregation on your property, depending on how big your property is and what you're doing with it. So anytime that you are a business owner, you should absolutely have a CPA as well as a tax strategist. But you guys, if you're watching this channel, I feel like I'm preaching to the choir. You guys already know that you need a CPA and a tax strategist to help you squeeze out as much as you can in benefits for you and your business. So finally, let's get to cryptocurrency. This is a big one, of course, that's coming up, recently. We now have quite a few crypto millionaires, billionaires, people that, they bought $3,000 of Ethereum and now their portfolio is worth 120 million. Okay, so they're buying homes, they're buying assets, they're buying other things. What do you need to be aware of as far as effectively trading crypto for a piece of real estate? Okay. Now, we just did another video on cryptocurrency. So if you have not seen that, I will do my best to post a link to that here in the comments. Let me get that for you right now, and we'll get it here posted in the comments. So definitely check out our cryptocurrency video. It goes over the top 15 mistakes that people are making in cryptocurrency. But I would highly, highly recommend that, and you can do that, don't get me wrong, all right, but work with a professional. Please work with a professional, because we've had cases where somebody literally bought a house in crypto, right, thinking in their mind, well, I'm trading one asset for another asset, there's no tax on that. Yeah, unfortunately there is. Anytime you trade or, excuse me, guys, sorry, trade or change your crypto to something else, even if you're going from coin to coin, that is a taxable transaction for you. So a lot of people don't realize that, and nobody's ever told them that. So take this as your word of advice to the wise. Okay, please work with your CPA and your tax strategist, making sure what that tax burden is going to be if you're trading crypto to buy real estate. Now, whether that's your primary or rental or whatever it is. The one, and I'm just going to throw this out there, if you reach out to your CPA and you ask them what to you, if you're a crypto trader, and you ask them what to you is a very innocuous question like, hey, can you tell me what an altcoin is? If their face goes blank and your CPA has told you that they know cryptocurrency, obviously they do not. please run away. Please go find a CPA that actually specializes in cryptocurrency. Tax Goddess does, but work with us, work with somebody that knows what an altcoin is, please. Just to make sure that you are covered and that you're not going to get caught by some of these 15 mistakes. If you check out, should be down in the comments below, check out our cryptocurrency video. Those are some of the most common mistakes and where the government is really hunting people. So the purpose of today's video was to talk about the house, some of the benefits of the house, and why you would or would not want to buy a house, primary house. Now, we really did not cover rentals in this. Okay, rentals are an entirely different issue. We did not cover one of my favorite tax strategies, which is buy, live, and flip every 2 years. Okay, those are some amazing strategies for using real estate as a way to really gain wealth really, really quickly. If you guys would like to see the videos on those, definitely let me know. Throw them down in the comments or reach out to us on taxgoddess.com and set an appointment or send us a message, and I'll try and film video on whatever topics you guys would like to see. So in the meantime, I hope everybody has a wonderful day, and I'll talk to you all later. Thanks, guys. Bye.